Hi, I'm Bert Nussbaumer from macrobeat.co.uk. After a rather quiet week with ECB meeting that passed without any sort of new stories out there, the Fed minutes didn't really get any sort of further indication of anything new. We had mixed data from everywhere, some better, some worse. So really the market was more or less going nowhere. Foreign exchange market in particular just didn't really seem to be interested on any of the stories that we had out there. So today I thought we do a little bit of a sidestep and having a look at Canada. Canada is something that I started to focus on, getting a little bit more bearish on the Canadian dollar, and just wanted to show a few areas on the housing market which has been really what caused the problems in Australia, where the economy just suddenly started to get a little bit of pain and the currency started to weaken on the back of it. On the first slide, we look at Canadian housing starts. So there we just can clearly see we start to move below or stay below the sort of moving average of the previous 10 years. And we just started to have a new sort of move lower into the new lows that we last seen earlier 2011, 2012. This should really be a concern for the Bank of Canada, having hiked rates now 3 times, while at the same time most other central banks have been becoming more dovish, and as well as the Fed started to move to a pause from aggressive hikes. So in that sense, given the correlation as well between the US and Canada, I would just expect the Bank of Canada on the next meeting on the 24th of April, maybe even finally start to blink and move to a holding pattern, or even starting to get a little bit dovish as well. On the next slide, we have residential sales. As you can see, that number continues to drop and is among the lowest level in the last sort of 5 years. As I said, this is definitely a reason for concern for the Bank of Canada and for the consumer overall. The next slide, just to sum these sort of details up, we see the price development, the residential average price that we see starting to turn into the negative territory in many of the states. We have a few still outstanders that seem to be growing, but more and more we have various states starting to move into the negative territory. This is something we're definitely going to be watching going forward, as this will really give us a better idea of where the Bank of Canada might be having its focus going forward. As I said, after 3 hikes with the rest of the world central banks turning dovish, it's probably time for the Bank of Canada to step aside as well. Going over to the currency market, we have the dollar Canada chart here. This is a monthly chart, a long-term chart, just sort of trying to watch it from 30,000 feet to see what sort of potential we might be having here. So I have no doubt that while the US is still hanging in there in terms of data, we have an attractive yield level in the US. And while the US data is not really turning over, I see no reason why the dollar shouldn't stay strong. And with probably a Bank of Canada turning more dovish, I could see a strong potential for dollar Canada to move higher. On the next slide, I have a cross that might not be familiar to everyone. It's Aussie against the Canada. This is a trade I would like, even though I have been bearish Aussie for the last sort of 18 months. But I think in this cross, the so-called relative value trade, I would just think with Aussie having adjusted to its problems, the Canadian dollar still having to adjust to its problem, this is a trade that would at least leave you neutral to the dollar. It would leave you neutral to the commodity story. It would even leave you neutral to the risk on, risk off story, as the only really call you make here is the Aussie is going to outperform the Canadian dollar. So this is a trade I like very much. On the last slide, we have sterling against the Canadian dollar. Obviously, sterling having been depressed from all the Brexit mess that we have, all the political problem as well as the economic one. Once we can sort out Brexit, sterling Canada long is probably the ultimate trade. As I said, if we don't get any general election in the UK, this could be the ultimate trade on the top side. And this is it really for me. And I wish you all a nice Easter, a nice weekend. And that's me, Bert Nussbaumer from macrobeat.co.uk. Thank you.